Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it's a Thursday morning and the cues from global markets are extremely strong. The GIFT Nifty was also trading in the positive zone last time I checked. We ended in the green yesterday, but well off day's high. But today's setup, although it's looking good, but the GIFT Nifty is hinting at muted cues and its Sensex monthly expiry as well. So perhaps we could be in for some bit of volatility. We'll talk about the cues for trade, the setup for today, and a whole host of stocks later on in the show. And of course, we'll be taking up all your stock-related queries as well. So keep them coming in on our live feed. We will try and get them addressed during the course of the show. But let's quickly take a look at the top stories at this hour before we talk about the cues for trade and other stocks and news. Wall Street ends higher, boosted by a rebound in technology names. The Nasdaq gains over 1%, while the S&P 500 also advances, with the Dow gaining somewhere around 300 points. Asian markets have opened largely higher, tracking cues from Wall Street. Japan's Nikkei has crossed the 59,000 mark for the first time. South Korea's Kospi has also crossed that 6,000 mark for the first time. Meanwhile, the GIFT Nifty is indicating a marginally positive start for our own markets. Oil prices are steady as supply concerns persist from potential military conflict between the US and Iran. All eyes will be on talks that takes place in Geneva today. Meanwhile, if you look at precious metals, gold prices inched higher on tariff-related concerns, and silver also climbed somewhere around 4%. Veteran banker and former Kotak Mahindra Bank chief Uday Kotak says that AI is for real and warns that India should guard against technological dependence. He calls Indian businesses to invest at least 10% of their revenues into research and development. Alright, let's take a look at the cues for trade. When it comes to the global markets, it's looking pretty good. Both South Korean and Japanese market managed to hit fresh highs. As I was mentioning earlier, Kospi breached that 6,000 mark for the first time ever. Nikkei also crossed at 59,000 level. The GIFT Nifty is signaling a quiet start. Last time I checked, it was up somewhere around 8 to 9% or thereabouts. US futures, meanwhile, are slipping after the overnight rally that we saw on Wall Street. Wall Street, by the way, gained for a second straight day. And the sentiment was lifted by Nvidia earnings. Earnings and guidance both beat expectations. It's the AI boom that pushed Nvidia's data center revenue up by 75%. In fact, speaking about the concerns around AI valuations, the CEO of Nvidia, Jensen Huang, said that the markets have got it all wrong on AI threat to software companies. He said that AI will enable the use of more software tools rather than replacing them. So that's one thing that he spoke about, and that's of course been gripping markets world over, the concerns over AI valuations, and that's why we have seen such a sharp a crack coming in on AI technology stocks, so to say, both globally and here in India. But aside of that, if you look at Salesforce, there was mixed guidance and the stock plummeted in after hours. I think that's something that's weighing in on US futures as well. Aside of that, the other big cue to watch out for today will be the nuclear talks between US and Iran. Oil prices are holding steady, but that's a crucial development. It's the third round of talks between the two nations, and we'll have to see what really comes out of it. Back home yesterday, we ended above 25,450, but 25,650, we clocked in that level. 25,652 was the swing high, but we came off 200 points from the day's high. Mid-cap index, however, managed to outperform, and breadth also steadied a bit towards the end of the session. It's the monthly FNO expiry when it comes to Sensex. There will be a fair bit of volatility today as well. Metals, autos, they were shining yesterday. IT saw value buying, but it paired its gains. But let's talk about the foreign investor flows as well. FII's bought shares were 2,990 crores. And DIIs bought equities worth 5,100 crores. So steady buying both from DII and FIIs yesterday. But on that note, let's bring on board our guests for today. Joining me, Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal, and Aishwarya Dadhich, Founder and CIO at Fident Asset Management. Gentlemen, lovely chatting with you this Thursday morning. Things are looking pretty okay after the kind of badgering we've had both in IT stocks, even markets as a whole. Aishwarya, let me come to you first. Overall sentiment, do you think it's improving, or would you say that it will remain, a little iffy? Because technology names did see some buying yesterday, and overall as well, globally, we've seen some bit of stabilization coming in. But will the concerns play out or keep playing out going forward, both on the trade deal, trade developments, and the AI fears?
Good morning, and good morning to all the viewers. Obviously, Feb, as what we witnessed from December, January, has also been very volatile. But what I have seen in this month so far, that couple of things which indicates towards some positivity. We fund managers are always biased. We are more optimistic, and we always try to find out things which can take us forward. But if you look at a couple of data points, which I believe is very interesting. First is if you look at the FI flows, after intensive selling in November, December, and January, Feb so far, we are seeing that FI inflow into Indian market there's a marginal positive uptake of 4-5 thousand crore. This is despite of massive selling that they have witnessed in IT. I think in IT they have sold more than 10,000 crore almost last 15 odd days. So that indicates that the view about India is slightly changing. Even if you look at the derivatives short position, from 95% level of short, they are now inching toward almost 70-71%. So that trend is also changing toward the better. But what is really important is if you see the month of Feb so far, the broader market has actually outperformed the Nifty 50 or the large caps, primarily to do with IT, the way they behaved. But if you look at broader market, have given a return of close to 2%. Nifty mid cap 150 or Nifty small cap 250 is almost 2%, whereas the Nifty is hardly zero point 0.5 or zero point 0.6 so far. And the reason for it is primarily the way these small caps and the mid caps have performed in this quarter. Like the Nifty 50 gave almost 16% kind of a pad growth. But if you look at the broader market, the mid caps and the small cap, I think there's a revival witnessed in this quarter, upward growth of almost 20-25% for mid cap and upward of 30%. And even if you adjust for some specific sectors, the growth is upward of 25%. So that interest is building up for the broader market, even by domestic as well as the HNI. So these are the signs, which tells us that global setup is not deteriorating. It's not improving either, but the deterioration is limited. India macro is in a sweet spot. What is really changing is the earning trajectory, and especially in the broader market. So if we see some stability going ahead on the geopolitical side globally, I will not be surprised, Nandita, to see some catch up in the broader market in the coming months. So that is how I see the market as we're standing.
Okay, expect some catch up in the broader markets. I mean, we'll talk about where to really, look for themes in the broader markets in just a bit. But let me also bring on board Chandan. Chandan, what's the setup looking like for today? Yesterday we had a green day, so to say, but we came off quite significantly from the day's high. And the technical analysts have been pointing out that 25,600 is a crucial level, and once if we close above that decisively, that's when the trend would be bullish. Would you concur with that? And today, what is your sense? It's Sensex expiry as well. Do you think the Nifty can make a dash at the 25,600 mark again today?
Good morning. Thanks for having me. So Nifty got stuck in a range from last almost 9-10 days. Multiple supports are visible near 25,325, 25,350, but at the same time, as you mentioned, hurdles are intact at 25,650, 750, or even 900. So market is just flirting above and below its 50-day exponential moving average. It requires follow-up buying activity. However, support-based buying is intact, but follow-up is required to change the strength. So we need to focus on a broader trading range, not expecting bigger downside, but upside also seems to be kept. So we need to play the range-bound bias of the market in between 25,300 to 25,650 marks.
Okay, and what's the trade for today? Nifty or Nifty Bank?
So I'll focus more on the bank Nifty, which is comparatively resilience, has been respecting above its rising support trend line with the hold of key moving averages. We have noticed that selective PSU banks are doing well and few private bank also leading from the front. So because of that, bank Nifty is finding support-based buying. However, it has been consolidating the range from last almost 7-8 days. But till it holds above 60,500, buy on decline is advised, and we are looking for an upside move to a 61,750. So buy on decline and more positive on the bank Nifty than the Nifty index at current juncture.
Okay, more positive on the bank Nifty vis-a-vis the Nifty, and of course, bank Nifty has shown resilience. In fact, the entire banking universe has shown resilience. But let's talk about some of the stocks in news as well. Reliance Industries was in focus yesterday. It was the top laggard on the Nifty. Slipped quite a bit, almost 2% cut. There's some bit of news flow around Reliance Industries. It has completed a significant ownership restructuring in its step-down subsidiary, Reliance Enterprise Intelligence Limited, following a share allotment worth 853 crore rupees that formalizes a strategic partnership with Meta Platforms. Now, Reliance Enterprise Intelligence has allotted shares worth 596 crore rupees to Reliance Intelligence and worth 257 crore rupees to Meta Platforms arm Facebook. Now, Reliance Intelligence holds 70% stake in REIL, while Facebook will hold somewhere around 30%. Aishwarya, I want to come in, to you and ask you a question about the entire oil and gas space in particular. Crude prices have, of course, climbed past that 70 level and it is holding up above that 71 level. But if you look at the entire energy basket, both OMCs and upstream oil companies have managed to do well. How would you play this entire space now? Would you still look at OMCs or would you prefer upstream companies now?
So obviously, the last 3 quarters, the performance of both upstream and OMC has been pretty steady in spite of all the volatility that we have witnessed in the crude prices. And if we see forward, the probability of the predicting crude is very difficult because of the ever-changing geopolitical scenario, right? We understand that this Iran issue is ongoing, and if there is any fallout, we won't be surprised to see a temporary spike in your crude and Brent prices, and that will obviously have the impact on the OMCs there. So I would suggest that because the underlying thesis is so volatile or difficult to extrapolate, we would advise investors to stay away from taking any small view bet on any of these companies because the I believe the geopolitical scenario or the way the crude will behave is very, very difficult to comprehend from here onwards. We understand that the ability to maneuver the volatility of the crude prices, both by upstreams and OMCs, has been pretty decent, as we have witnessed in the last 3 quarters. But it's going to be a difficult take over there. So in oil and gas, I believe one way of rather playing that segment is somewhat to get into Reliance Industries rather than playing through any of these PSUs, because Reliance is better managed and they have other assets to diversify, which is just not dependent on crude prices. And talking slightly on crude, we believe the slowdown in the global GDP, if we witness the slowdown in China, we can't rule it out. So there's become a tussle or war between, how the Iran thing pans out compared to how the growth of China will play out. So I'm closely watching on China, and I think there will be an overwhelming impact of it on crude and obviously on oil season. So my suggestion is to stay away.
Okay, stay away from some of these oil PSUs, but of course Reliance Industries is a diversified play. So better to play this space via this company, and that's the thought from Aishwarya. But let's talk about the technicals as well. Chandan, what are the levels you'll be watching out for on this particular stock, Reliance Industries, given the fact that yesterday we saw a sharp cut? Do you expect the stock to go further down, or do you expect some bit of buying to come in at these levels?
I believe Reliance would be in a broader trading range. However, in last couple of days, it witnessed profit booking and call writing near higher strike, witnessed some consolidative move with writing at 1440, 1450 strike, but at the same time, support was intact at 1400. So only concern was to break the 1400, but good part is the expiry got over because earlier it was witnessing sustained put writing at 1400. So now level might slightly shift lower, which can take it to 1360. So I believe 1360 to 1440 could be the range for Reliance, and it might be in a broader, slightly negative to range bound bias kind of setup for next couple of days from current level.
Okay, that's the view on Reliance and 1400. That's a crucial level to watch out for. But from oil and gas, let's shift focus to the pharma space as well. Zydus is launching semaglutide injection in India upon the patent expiry. Yesterday, there was some news flow around Dr. Reddy's as well, and there was a Citi note wherein they were concerned about how big the opportunity will be for Dr. Reddy's in Canada, and they, of course, have been maintaining a sell call on Dr. Reddy's. Aishwarya, your thoughts on this whole semaglutide opportunity for pharma? Which are the players that stand to benefit the most? Because post Revlimid, this was supposed to be the big opportunity for some of these pharma names. So, what are your thoughts? Which ones do you like?
Yeah, so that is a very, very interesting area, and I think we did one detailed research on this particular segment. But what I understand, even if you look at the IPM data, the quantum of growth which is witnessed in this particular product is what is leading very strong growth in the IPM per se. And Zydus obviously is coming out with this product which is comparable to what Ozempic or Wegovy product that is there. And I believe there is a huge, growth opportunity in the whole space. But we at Fitent are not very, I would say, bullish on this scenario, given that the players that they're trying to enter will really see that move on valuation prices also. So if I really look at, we are more positive on the CDMO space, and the CMO space will be the supplier to a place like this. So we are categorically staying away. Like if I put an analogy to this, if you remember what happened with EV 7 or 10 years back, there was so much of excitement. But if you see the last 10 years, not many investors has actually made money there, right? Same happening with, possibly will happen with AI stocks, or I think will play out for, I would say, the data centers and things like that. So even in this space, I believe one has to be very careful. So we would be, not very excited on that space, because we believe that not many right companies are able to get that market, or possibly, there is a clean trade which can put that throttle of getting alpha for investors. So one has to be really in wait and watch mode, see which companies are really making it go, and then take a call rather than just jumping on those trades very early. So I would be which watchful there. We are playing at Fitent, we are playing through CDMO. We got into some of the names like Laura's in our portfolio. We got into players like Aquitas, which though are not really related to semi-glutide chemical and all that, but have created wealth for investors. So I think one has to be very, very watchful. This is more excitement, more narrative, but lesser money-making opportunities.
Okay, that's the view. Semaglutide, not so much excitement, at least when it comes to Aishwarya. He likes the CDMO plays. Chartically, what do you like? Chandan, would you look at some of these names like Laurus Labs, etc., Divi's as well for that matter, or would you stick to these generic players like Dr. Reddy's, Sun Pharma, etc.? Lupin as well for that matter.
Yes, so preferred pick will be Lotus Lab. It has seen a consolidation breakout on the daily and the weekly chart after the consolidative move last 25 trading session. It gave a decisive hold above 1045 with surge in trading volume. So I believe buying interest could emerge here. And this is one of the strongest counter which really rallied well in the last year and now has been finding buying interest on decline. So with the support of 1050, it can head towards almost 1130, 1140 kind of level. Apart from that, we are quite bullish on counter like Lupin. One of the strongest name which is holding the gains has been making higher tops, higher bottom on the monthly chart, all set to head towards its all-time high of 2400 marks. So buying is advisable in Lupin with support of 2250. It can head towards 2380 to 2400 kind of level. So Lotus Lab and Lupin could be two preferred idea if we need to pick from the pharma space.
Okay, those are the picks from the pharma space, Lupin and Laurus Labs, and additionally, Aishwarya is bullish on the CDMO end of the pharma universe. But just quickly take you through 2-3 more stocks that have been focused before I come to trading ideas of the day and a compounding idea for the day, for a compounding idea, not for the day, but for the coming few years. But let's take a look at some of the stocks that have been focused. Sanofi India, that has reported numbers, and the numbers aren't all that great. Net profit down 32%, revenue down almost 19%, EBITDA also shed somewhere around 20% on a year-on-year basis, and margins came in lower at 21.6% versus 22.9%. So this stock will be in focus perhaps on the negative side. IRFC is another stock that will be in focus today, And not so great news because the OFS opened up yesterday. Government reducing 2% stake. It had a green shoe option of 2%, but it will not be exercising that because the response to the OFS hasn't been all that great. And today it will be open for retail investors as well. Additionally, the company has signed a loan agreement for $400 million ECB loan, external commercial borrowing, with SMBC and MUFG Bank. So this stock will be in focus. And aside of that, Shelly Engineering will be in focus. It has bagged an order worth 420 crore rupees from a domestic pharma company. But let's take stock of the rates at pre-open. We'll wait for it to settle because the Nifty is showing 180 points up. Let's just wait for it to settle a bit before I come to it. But Chandan, coming to you, any trades for the day? We spoke about your pharma picks. Lupin and Laurus Labs, but specifically for some trading ideas for the day for our viewers, what would you prefer?
So I'll pick one or two counters from the metal space because the sector is comparatively doing well. Major trend is positive, and after the recent consolidation, again, most of the counters are witnessing buying interest. So Tata Steel could be our preferred name, which has been making high tops, high bottom on the weekly chart. We have seen better rollover. Put call ratio of the counter is higher with put writing at lower strike. In fact, we have seen the better roll cost as well. So one can buy Tata Steel with support of 209 for an upside target was 225. And apart from that, I believe Hindustan Zinc could be other name with support of 600. We can see an up move towards 645. So Tata Steel and Hindalco from metal and mining or zinc space can be the preferred idea for the day.
No, Chandan, you meant Hindustan Zinc or Hindalco?
Hindustan Zinc and Tata Steel.
Okay, Hindustan Zinc and Tata Steel, those are the two trading ideas for the day. But Aishwarya, any compounding ideas from your end for our viewers?
So I believe, obviously, just like since we are talking about metals, last 1 month has been pretty exciting. We have seen ferrous, especially a lot of this HRC and other CRC prices has inched up 18% in the last 1 month in India itself. In China, when the the production has gone down. In spite of that, we have seen spike of almost 1-2% on CRC. And even in non-ferrous, we have seen what is happening in copper and aluminum and all that. So obviously, there is some excitement on metal as a space, and there is a probability of better margin improvement of at least 150 to 2000 rupees per ton for ferrous led commodity in the coming quarters. So metal can do better in the short term. But since you asked on compounding, I believe there are better opportunities in the market. We are very, very positive on BFSI space. We have witnessed almost revival in credit growth of almost mid-teens. I think the evergreen will start reflecting and we'll see much better numbers out for NBFCs and mid-sized banks. And I would say there are a lot of assets initially highlighted that the growth in the small cap and the mid cap is coming to the center stage. There are many companies where we have seen that the valuation has gone down 20-30%, but the growth trajectory is improving, and that kind of thesis is looking very attractive. So if we just to give some example, a player like Office Space Solution, which is into co-working space, I have seen a sharp derating in the stock prices. But if you see that earning visibility, you can see almost 35-40% earning growth for the next 2 years with all the mix on the whole space and a beautiful GCC play on that. So and obviously we are owning this kind of companies at Fident, but then we are seeing a lot of these opportunities which can really compound money in the coming times. So office space is one area which is very exciting. We believe auto and auto ends is one other area which will get a lot of interest. We are very close to the February data, and we will see a very strong upward 20% growth for EV and two-wheelers. And a lot of these auto and companies has not seen major re-rating. So we are holding a significant exposure to TVS over the last 1 year, which has done well. But now we are thinking and buying opportunities in the small cap and the mid cap space in the auto and. So that is where there's a lot of compounding story in data, and one has to start looking out now. And that's what we are trying to do here. Actually.
Okay, all right. Auto and auto ancillary space. Of course, Vahan registration data also hints at very strong registration figures, right? So that's one space that saw very good traction yesterday also, and office space as you mentioned, and of course the BFSI space also looking good. Resilience we've seen in that space, especially when the markets were selling off. In the pre-open, just want to take stock of what's really happening. Now, the rates have settled a bit, so we are showing a 30-point uptick, 25,500, and the Sensex extremely flat. But looks like the broader markets will also fare pretty okay because advanced decline ratio is looking in favor of gainers. And some of these technology names are featuring on the gainers list when I'm looking at the nifty names. So let's see. Let's hope that we'll see some traction in technology once again today. But aside of that, let's shift focus to some queries then. We haven't really taken stock of a lot of queries and a lot of them are coming. So Chandan, let's start with you. Geetu Sandesh wants to know your thoughts on Paytm, and the time horizon is 1 year. Chartically, how would you look at it? The stock was up 0.5% yesterday, but in the last 5 days, we've seen some bit of selling pressure. But given the fact that the time horizon is 1 year, how would you really, look at this stock? If somebody has to get into it, is this the right time?
Yeah, so I think a very nice query on Paytm, and thank you, Gituji. So if I look at the price behavior of last 5 weeks, it has been consolidating in a range. If you ask me on immediate point of view, it would be tough for counter to hold beyond 1200. But yes, here the view is for 1 year. I believe one should accumulate because this is something where the next gen business could do well if I look at the growth of the GDP as a whole. So major support is 1030. With that support positional point of view, this counter can head towards 1300 to 1350 if someone is looking for 6 months to 1 year point of view.
Okay, that's the view. I hope that answers your query. Geetu, please keep your queries coming in. We will, make sure that all your queries are addressed by our experts. But Aishwarya, coming to you, since you were talking about the entire auto space, Harsha Singh wants to know, your outlook on some of these names like Hyundai Motors, because this stock has seen very high volatility. Since you were alluding to autos and auto angs, and you can really look for opportunities in this space. But overall, in the auto space, would you look at the likes of Maruti, Hyundai, all these names, or would you look at two-wheelers, SUV makers for that matter? Which end of the spectrum should one focus on, especially now?
So, what we always focus on is growth, Nandita, right? And when we are looking at whether it is PV or two-wheelers or and CV, the growth is very visible in two-wheelers. That's why we were very positive and bought players like TVS. In four-wheelers, there are like four major players. If I put Maruti, Hyundai, Tata Motor, and your Mahindra. And if you see this performance of these companies over the last 4 to 6 quarters, Maruti has been losing market share, and same goes with Hyundai. But we have seen that Tata Motor PV as well as Mahindra is the one which has been seeing growth in the market share and with the right placement of product. And we have seen a lot of narrative and broha about many of those Mahindra's product getting acceptance, and same goes with Tata Motor PV products. So in that sense, and if we compare it to valuation, Hyundai is not cheap in spite of losing market share and lower growth. And same goes with, I would say, Maruti. So they both are trading at between 25, 27 time PE. And if you look at Mahindra, which is almost at the same valuation, though obviously we have to look at it on standalone because they have TechM and MMFS and all of that part of their companies. But my thesis is very clear that let's stick with businesses which are gaining market share and which are showing consistent growth. So in four-wheelers, players like Mahindra, possibly Tata Motor at these valuations making more sense. In two-wheelers, we will stick with players, but I believe OEM, the alpha generating opportunity is slightly limited. What is really exciting is when we go down on the auto end side. And that is where we want to play quasi growth on CV as well as PV, where you can see higher growth opportunities.
Okay, so that's the view, an overarching view on autos. Valuations wise, Tata Motors, Mahindras, they are better placed, and auto ancillaries where you can find exciting opportunities. Hope that answers your query, Harsh. But moving on to IRFC, Chandan, this stock has been in focus, right? In fact, railway stocks haven't really, have only been chugging along. They haven't really shown, great traction. But IRFC, of course, in particular, has been in news because of the OFS. Your Satish Narkar wants to know your thoughts on how one should navigate this stock. Any particular levels you'll be watching out for here? It's quoting at 104 right now.
So trend of the counter is negative. It has been making lower top, lower bottom on the daily and the weekly scale, and now all set to give the breakdown of last 3 years. In 2024, it made low near 98, and I believe it can go down below the same. So structure is weak. Better to avoid till it remains below 110. It can go to 98 or even 92 kind of levels.
Okay. Even 92 can be tested when it comes to an IRFC. Trend is on the negative side. So there's one data center play which has seen very, very good traction, NetWeb, and there's a query that's come in from Naveen, and Naveen has been he's been a viewer who's been sending his queries for a very long time. So let's get his query addressed. At these levels, what are your thoughts on NetWeb? Do you think the risk reward is looking attractive still? Because in the last 1 month or so, it has already rallied 20%. 3,650 is where it's at. But if you compare it with its highs, 4,479, that was a 2-week high. A lot of ground to cover. So do you see more upside here on, and should one look at riding this up move?
Yeah, so if I have to reply on this, trend is positive. We have seen recovery from lower levels. It took support near 3,000 and higher base is being formed at 3450. So with the support of 3450, it can head towards 4,000 to 4,100.
Okay, 4,000 to 4,100. That's the upside that Chandan is seeing on the charts. Hope that answers your query. But there's another stock, KEC International. For the long term, Alex wants to know, does it merit a look? Your thoughts, Chandan?
Yeah, so here, I believe if I look at the price behavior, it has been making lower top, lower bottom, and counter is trading at multiple months low level. Trend structure is negative. However, risk reward ratio might favor, but structure is bearish. I believe more profit booking can be seen. Let it correct and settle near 560, 550 before we go for bargain buying.
Okay, that's the view on KC. Aishwarya, what is your perception when it comes to some of these AI data center beneficiaries in particular? Not just these players like NetWeb, metals, copper, etc., will also be beneficiaries of the data center boom, right? If you have to purely look at this end, the data center boom, which are the pockets that would excite you?
Yeah, so I think like riding these stocks is like riding Ferraris, there's so much of excitement. And if you really connect AI and data center, I don't think there are really right names, many such opportunities in the listed space. Right? We talk about E2E or NetWeb or Orient Pro and players like that,
Yeah.
which are creating some work related to AI or data center, either on the infrastructure SaaS side or on the product side on creating like on the agentic AI product side. But what we have been doing, I think it's always better to play proxy on these players. So when you're talking about data center, you would definitely need a lot of wires and cables and power. So what we are doing at Fident is obviously trying to understand that where we are seeing a lot of growth coming for wires and cables, which is related to data centers, and there are many great companies which are there, which are available at a much more reasonable valuation, and which will be a beneficiary of this whole ecosystem of data center and AI and things like that. So we are positive on wires and cables. We are also positive on power, like we were talking about KC Internationals and other players. We believe that is one segment which is very attractive on valuations. You look at tower, the tower players, the transmission players, and all of that. 1.5 year before, when market was at ludicrous higher valuations. Though a lot of these companies were at 30, 40, 50 times. Many of them are now coming at below 20 time PE after the froth being taken care of. So those not a very clear play of power helping on data center, but I think power is one area which can also be should be on the investors track. I would say to put money over there. But wires and cables is definitely one. And coming directly on data center and all, we have identified player like Orient Pro, which is basically a beautiful play both between product and AI agentic play on of AI over there. And we have been evaluating other places per se, but I believe valuations has been a concern and investors should be watchful of that. So it's not always better to ride on high narrative stories at a high speed because the probability of getting and hitting is also very high there. So one, be watchful.
Okay, be watchful, but there are a lot of these proxies to the data center boom that you mentioned, and one should take stock of that. With that, Aishwarya, I would like to thank you for taking out time and joining in. Always a pleasure. But let's take stock of the market open. On that note, we've opened 50 points higher on the Nifty. 25,550 or thereabouts, that's where we are at the current juncture. The Sensex is up 200 points. Mid-cap index moving pretty much in tandem with the benchmarks, up 0.2%. And the breadth of the market is also looking fairly steady, 2:1. But early days to really comment on whether this will be the trend for the day, so we'll wait for it to really settle down. Bank Nifty as of now clocking in a 100-point up move. So 0.3% kind of gain coming in on the Nifty Bank Index as well. But let's take a look at which are the sectors that are taking the lead at the current juncture. Yes, IT. As we all know, last night we saw a strong rally come through on Nasdaq, and it was the AI related names that saw good traction post Nvidia's number. Today, the Nifty IT Index is extending its gains for a second day. 1.2% up move here. Yesterday, it was up in excess of 2% at one point in time. It paired some of those gains, but nevertheless, ended the day higher by 1.5%. Today as well, another 1.5% gain coming in. PSU Bank saw a bit of a profit taking yesterday. Today, they are, steadying as well. 0.3% kind of gain coming in on the Nifty PSU Bank Index. Autos saw very good traction yesterday, and today they are picking up speed from where they left. 0.2% kind of gain coming in on the auto pack. Banks are doing well, as I mentioned. Metals are doing well again. Metals were the top sectoral gainers yesterday. Pharma extending gains. Energy is also doing well, and FMCG as well, showing a hint of green. And so is the realty pack. So all the sectors are trading in the green at the current juncture, which is good news. But let's see whether or not it sustains through the day or not, because it's F&O expiry on Sensex, the monthly expiry. So things may be a little volatile as we go ahead. But taking stock of the individual movers then, if you look at the top 5 names on the Nifty, they are from the tech pack. Tech Mahindra taking the lead, 1.5% gain. Infosys, TCS, HCL Tech Wipro, all of them are among the top gainers. Eicher Motors is the other one that's gaining 1%. Eternal in the green now, but let's see whether it manages to hold on to these gains, because Eternal has been witnessing a lot of selling pressure in recent times, and whatever gains it has made in the early part of the session, it has given it up as we had progressed through the day. So, we'll have to see whether or not Eternal manages to hold on to gains. Bajaj Auto, Maruti Suzuki, all of these auto names are doing well. Bharat Electronics is, gaining traction. SBI Life, Geo Financial, Shriram Finance, SBI Life. So all these BFSI names also doing well. So is L&T, that was a laggard yesterday. On the flip side, Bajaj Finance as the top laggard, down 0.5%. Nestle, Ultratech Cement. Some of these private banking names like ICICI Bank and Axis Bank are also out of favor today, although the Nifty Bank Index is in the green. Hindalco and Coal India from the metal basket are seeing some pressure. Tata Consumer, Kotak Mahindra Bank, these are the other laggards. Even Titan and HUL is extremely flat. So some of the consumption names are also out of favor. The Tata Consumer also in the red, as I mentioned. Let's take a look at some of the mid-cap names, reactions to earnings and news flow. I think KSB reported good set of numbers. That stock is up 7%. Tejas Networks up 5.5%. Maharashtra Seamless is another one. I can see 3% gains coming in there. Some of the mid-cap IT names are doing well, the likes of Hexaware Tech. Schaeffler reported good set of numbers day before yesterday, extending its gains. Bandhan Bank is also gaining 2.5%. what's not doing well? Home First. There was supposed to be a block deal in the counter. The stock is down somewhere around 5%. So yes, Home Finance, that's the top laggard on the Nifty 500 index. For Tejas Networks, as I said, it was rallying. It's signed an agreement with NEC Corporation to manufacture and supply 5G massive radios. So that's why, because of this agreement, the stock is buzzing in trade today. But you also have Afcon's Infra that's extending its losses. Manappuram Finance, the CEO may be going on a 3-month leave on medical grounds. So I think that's something that's making investors cautious about Manappuram Finance. Aegis Logistics, SBI Cards, these are some of the other stocks that aren't doing all that well. But on that note, let's see if we have our guest with us, the market maker of the day, Shibani Kurian, Senior Fund Manager and Head of Equity Research at Kotak Mutual Fund. Well, she'll be joining us in just a bit. But, till then, let's take stock of some brokerages then. There are quite a few... Okay, Chandan, let me come to you first. Chandan, there are some interesting brokerage notes that have come in. I was going through one of them, Ola Electric. Goldman Sachs has downgraded the counter. Any thoughts on Ola Electric, looking at the charts?
So here the chart is clearly negative. It has been making lower top, lower bottom. If I look at the price history of last 18 months, it has seen a corrective move from 157 to now 25. I believe better to avoid. But if someone holding, try to exit. Don't average it out as of now. So it would be very tough for any kind of re-rating as of now if I need to consider the price behavior. So better to avoid and don't average it as of now. If I look at the price behavior, till it remains below 28.5, it can go down to 23, 22 levels.
Okay, that's the view on Ola. Interesting brokerage note, and of course Chandan's view. Chandan, there are a couple of queries that are pending, so let me just get them addressed by you quickly. Satvika has a query on Bank of Baroda, and from the banking space there is another query. Gomthi wants to know your thoughts on Yes Bank. Particularly on these two counters, what would you do? Because obviously PSU banks have seen very good traction, and Bank of Baroda is one of them. Very good moves. Last 5 days we've seen a 6% move coming in. What's the call there? And Yes Bank, how would you approach Yes Bank? Because the stock is up 1.5% today.
Yeah, so I have positive view on the banking name, or in fact, I would like to take few name as well as a top trading ideas for the day. So positive on the Bank of Baroda, it has been making higher tops, higher bottom from last almost 10 days, given a decisive breakout above 313. So with the support of 313, it can head towards 333 kind of level. Apart from this, positive on the counter like Indian Bank and Union Bank. So positive on most of the banking name as of now. Apart from that, Canara Bank is one strongest name, which can also head to higher levels with support of 158. It can go to 165, 169. So I believe if someone is to be looking for some relative strength or alpha generation on immediate point of view, better to focus on PSU Bank. So Ken Bank, Bank of Baroda could be the preferred name. And apart from that, positive on the wire and cable. So KI has been making higher tops, higher bottom. With the support of 4800, it can go towards 5300 kind of level. Polycab could be other name in the same space. With the support of 8200, it can go to 8800 level. So PSU Bank and wire and cable could be the two sector one need to focus on immediate point of view.
Okay, all right, got your point. Viewers, hope that addresses your queries as well, and some additional ideas coming through from Chandan as well. With that, Chandan, would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and look forward to more going forward as well. Well, on that note, let's see what the markets are really doing. Given up some of those, paired some of those gains, so to say, 20%, 20 point up on the index, 25,500 still, flashing on the screens, and Sensex up just about 60 odd points. Aside of that, looking at some of the names that are doing well, Shriram Finance has taken the lead now. That stock is up almost 1.5%. Other IT names are doing well today as well. And SBI Life is among the other counters that are doing well. Eternal is also trying to build on to those early gains that it is clocking. Eicher Motors, among the autos, two-wheeler pack is doing well. It's Eternal, as I mentioned, yes, is doing well. BEL, SBI, L&T, Maruti Suzuki. So the list of gainers is long today, and that's something that will provide a lot of support to investors. Axis Bank is the top laggard on the Nifty, followed by the likes of Ultratech Cement, Adani Enterprises, Interglobe. These are some of the movers on the downside. Some consumption names also feature on the list of losers, the likes of Nestle, Tata Consumer, ITC. ITC, mind you, has been under pressure for some time now and extending those losses. But as promised, the market maker of the day, Shibani Kurian, Senior Fund Manager and Head of Equity Research at Kotak Mutual Fund, is joining in. Shibani, lovely chatting with you this morning. First of all, want to get your thoughts on what you feel the overall sentiment in the market is looking like right now. We've seen a lot of sell-off come through, on the back of AI fears. We'll talk about tech in details in just a bit. But overall, how is the sentiment looking like, especially since FIIs have started to come back? Not in a big way, but still they've started to reverse the kind of sell-off we saw over the last 1.5 years. So overall sentiment, what are your thoughts on the market?
Yeah, hi, good morning. So if you look at our markets, of course, globally geopolitical risks remain, and that means that in the near term, we may have to navigate some degree of volatility. But when you just focus on fundamentals and our domestic markets, there are three key factors to really watch out for and discuss. And I think the most important is earnings. So we've just completed the Q3 earnings season. Earnings were in line with estimates at the Nifty level. However, when you look at the broader market, clearly market breadth in terms of earnings has improved. So when you look at, say, NSE 500 in terms of reported PAT was at about 11% in terms of YOY growth, which is higher than nominal GDP at this point in time. In terms of sectors as well, the breadth has been much better than what it was in the last few quarters. And that has meant that the FY27 expectation of mid-teens earnings growth for Indian equities and corporates has been largely intact. So that's number one. Second, from a policy perspective, clearly there have been measures that have been taken, monetary, fiscal, as well as conclusion of some of the trade deals, which has meant that from a policy perspective, things are stable and supportive. Third factor is valuations. Today, valuations are far more reasonable than what it was, say, a year ago, both on an absolute as well as relative basis. On an absolute basis, when you look at the Nifty is back to its long-term average multiples on a one-year forward basis. And India's premium as well to emerging markets is now back to its long-term averages. So in this sort of an environment, obviously there is near-term volatility, but the key fundamentals seem to be somewhat better than what it was possibly the same time last year.
Okay, got your point. Last year, of course, we were, we underperformed our global peers quite grossly, right? And this year as well, if you look at the Nifty YTD chart, you'll see, we've lost somewhere around 2.5%. Contrary to this, if you look at the likes of KOSPI that have rallied in excess of 45% already so far this year, what's your sense? Do you think this year would be as turbulent as last year for the Indian markets?
I think a lot really depends on earnings delivery. If what we have seen in this quarter continues and we see improvement in earnings, then the fact that India vis-a-vis the rest of the emerging pack, if you look at last year, what happened is because of muted earnings, there was a wide differential between us and the rest of the EM pack. And of course, valuations were elevated, both of which meant that FIIs were net sellers and a lot of the money went to other EMs. Now, both these factors are possibly getting addressed. And so from that perspective, on a relative basis, we are starting to appear better. Near term, of course, there is volatility. One has to navigate through the uncertainty as far as geopolitical tensions are concerned. So there is a constructive view on the market, but a lot really depends upon how the earnings delivery for corporate India pans out. Just as we were discussing earlier, in FY27, now we expect mid-teens earnings growth, and that earnings is getting broad-based across sectors. So I think if that kind of holds through, we should see some improvement in terms of performance for Indian equities.
Okay, all right, got your point. Of course, valuations and earnings recovery, perhaps getting addressed. But let's talk about this whole AI scare that really dented sentiment, and we've seen how technology stocks world over have really reacted, and our markets as well. Indian technology stocks have really taken it on their chin, right? But what's your perspective here? Do you think it is overdone? Our Indian companies, IT companies, were anyway reporting single-digit growth. Would it further dent growth for them? What are your thoughts?
So, to be very honest, we are in uncharted territory. So, if you look at what is happening as far as AI is concerned, this is clearly a transformational change. However, the market is at this point in time reacting to concerns that AI would completely cannibalize IT services revenue, particularly from segments such as, the erstwhile application development, even things like system implementation, ERP, and the like. Now, usually when there is this kind of a change that takes place, which is transformative, market sentiment moves from one extreme to the other. And at this point in time, the fear is that IT services is dead. I think over a period of time, we will possibly realize that that is not the case. There is room for IT services in terms of workflow. However, the nature of work changes. More importantly, for enterprise to adopt AI, there would be requirement for IT services companies to make them their platforms data ready to be able to integrate AI into their overall workflow. So there is going to be work. However, there also will be deflationary trends on the existing pool of work, which is more application development, maintenance, and the legacy architecture. So, how companies navigate both these forces will determine finally who comes out as winner. Now, typically in this sector, we have seen that the sector tends to be homogeneous. However, going forward, we believe that there will be differentiation. Players who are able to integrate AI into their own systems and workforce to bring about productivity and also offer solutions to clients will possibly emerge winners. But near term, of course, there is uncertainty, and how things really pan out will become clearer over maybe the next few quarters or so. So I think we will have to still wait and watch in terms of how this really unfolds.
But just going through your own fund, I think you guys have an almost 7% weightage on IT. So, how are you positioned, large cap versus mid cap?
So, as I said, our view at this point in time is largely neutralish on the sector vis-a-vis the index, which is reflected in the disclosures that are made. Also, I think it's going to be a lot more stock specific than just a sector view. As I mentioned, I think companies that are able to adopt and change and also reskill their workforce at a faster pace to meet the growing requirements of enterprises in terms of working with say AI service providers, etc., will clearly emerge winners. At this point in time, market sentiment is clearly at one extreme. However, I think it will possibly move somewhere in the middle where there will be work, but there will be deflation. And how these companies navigate will finally, determine who the winners are. So I think it's going to be a lot more stock specific from a sectoral perspective going forward.
Okay, stock specific. But let's talk about other sectors as well. You guys have a 24% weightage on banks, right? Would you stick to the large private banking names, or would you look at PSUs? Because PSUs have already rallied quite a bit. So which end of the spectrum would you guys be tilted towards?
Yeah, so I think our view on banking as a sector continues to remain positive. We've seen that overall, from a sector trend, credit has started to improve. Of course, we need to wait and watch and see if deposits kind of keep up pace because now credit deposit ratios have moved up. More importantly, from an earnings perspective, if you look at FY26 for banks, especially some of the large banks, earnings would be in single digit. But in FY27, with margins improving as the rate cycle bottoms out, this earnings trend should improve to mid-teens. Therefore, there is likely to be improvement in earnings for the sector as a whole, and credit costs are largely holding up. Now, if you look at the overall space, by and large, valuations have been in line with long-term averages. PSU banks have clearly outperformed in the last 1 year. And in that context, when you look at the private banks today, which are trading below their long-term average multiples, valuations are looking fairly reasonable in context of, as we discussed, that earnings improvement is possibly around the corner. And these are banks with fairly healthy return ratio profile as well.
Sure. Got your point. I just want to bring your attention to the mid-cap universe as well. Globally, of course, there are headwinds, but on the domestic front, things are looking pretty okay now. Only on the basis of earnings recovery, are you spotting any opportunities in the broader end of the markets? If yes, which pockets, would you really prefer now?
So absolutely, you hit the nail on the head that if you look at earnings, especially where mid caps are concerned, in fact, even last year, mid cap earnings have been trending better than the headline large cap names and, of course, the small caps as well. So even on 9-month FY26 basis, if you look at mid caps as a segment, earnings growth has been fairly healthy. Here, valuations are slightly elevated in terms of where they are vis-a-vis their long-term average multiples. However, there are clearly opportunities given that the earnings profile has improved considerably and is largely holding up. So, within the overall context of sectors, one, of course, we discussed banks and financial services, which is a large segment. The second segment where we are
Hmm.
positive on is the consumer discretionary space, which includes autos as well as auto ancillaries. And here there are plenty of opportunities in the broader market. The third segment where we are positive on is healthcare, and within that, specifically the hospitals segment. Here, we believe that today valuations have become far more reasonable. The opportunity is fairly large in India, and as of course per capita GDP improves, people want more quality organized healthcare, and that leads to higher occupancy. A lot of companies and hospitals have expanded their capacity, and therefore, as capacity utilization improves, you should also see better earnings trajectory. So, overall, if you look at the way we are positioned across sectors, these are the areas where we are positive. And of course, we will keep looking at opportunities more bottom up in the broader market as well, wherever we see comfort on earnings growth and where valuations are reasonable.
Okay. All right. Auto ancillaries, discretionary. These are some of the pockets where one can look for opportunities. But solar was being touted as one of the emerging themes. But there's been a setback on that front as well, right? The US has imposed a 126% tariff on Indian solar imports, and we saw stocks like Premier Energies, Vari Energies, Vikram Solar. Some of these taking it on the chin. How are you looking at this development? And do you think this kind of is a big setback for some of these companies' US ambitions?
So of course, as you know, trade and tariff is a evolving situation. So we will have to wait and see how it
Hmm.
really pans out. Now, if you look at the X of this tariff issue and what has panned out, overall the opportunity set remains fairly large for the sector as a whole. So without getting into specific names as such or impact on specific companies, uh, as far as the tariff situation goes, I think we will just have to wait and watch. If there is a tariff and then the impact, that impact can be large, but I think it will depend company to company in terms of where the manufacturing is happening and the inputs, and therefore whether the tariff is applicable or not, and to what extent it would be applicable. So I think it's more a wait and watch at this point in time. But if you look at the overall capital goods
Hmm.
space, clearly, there are opportunities that are now visible. In fact, we've started seeing some improvement as far as private sector capex is concerned. The order flow momentum in terms of growth, especially in certain segments which include transmission and distribution and equipment, especially in that power equipment space, the growth continues to remain fairly sustained. New age sectors, which include semiconductors, data centers, renewable energy, all of that is also seeing constant flow in terms of order bookings. So there are pockets of opportunity even within the overall capital goods space. What we are really watching out is segments where there are now signs that private sector capex is starting to improve, and therefore, looking at those
Hmm.
areas within the overall capital goods infrastructure space.
Okay, got your point on these, domestic manufacturing plays. Of course, private capex is improving, and that means there are opportunities on that front as well. But Shivani, overall thoughts on metals, because that's been one pocket that has seen a very, very good rally. Do you think valuations are full now for metals?
So I think yes, one way you're right that there has been a rally and therefore there has been a catch up in pockets of valuations. However, when you look at the pack in two parts, one, if you look at the non-ferrous side, I think supply demand dynamics continue to be favorable. In fact, whatever supply is possibly likely to come up in that sector will possibly be more back-ended in nature, and demand remains fairly intact. And therefore, from that perspective, our view structurally on non-ferrous remains fairly constructive. On the ferrous side, what needs to be watched out for, and here it's a little bit more tactical in nature. One, of course, there are some signs of demand improvement, but it's very, very nascent. China still continues to be the big driver of demand, and there we are yet to see a full-fledged improvement in demand, though policies have been trying to get demand back on track, especially where real estate is concerned. However, there is another factor to watch out for where non-ferrous is concerned, and that is China's anti-involution policies. If they are serious about bringing down and curbing supply, focusing more on profitability, that can have a bearing as far as supply dynamics go, and therefore that would be positive for the sector. So, a little bit more tactical in nature, in terms of where the non whether, sorry, I beg your pardon, where the ferrous side of the equation is concerned. But overall, if you look at the metals pack, the pack itself is cyclical in nature, and therefore that kind of warrants a more tactical kind of an approach as far as the sector goes.
Okay. All right, tactical approach to metals, and of course, the factors relating to China, their involution drive, if that really takes shape, then of course it will be positive for the sector as well. Shivani, before I let you go, we've discussed a whole lot of sectors, but if I ask you to define your preference in a pecking order, the top three sectors, how would you go about it?
So I think our the top sector in terms of the pecking order still remains banking and financial services. Remember, this sector has now become fairly wide. We discussed private banks, public sector banks, but also remember there are NBFCs, there are capital marketplace, there are asset managers. So within the sector, banks, some of the asset management entities, and some of the bottom up NBFC plays continue to remain a segment where we are positive on. The second is, of course, as we were discussing, the various policy initiatives that have been taken should help in terms of improvement in demand on the consumption side, specifically where autos and auto ancillaries segments are concerned. And also, if you look at auto ancillaries with some of the solutions that are being seen as far as the trade agreements are concerned, that should help in terms of demand kind of settling down, especially where companies have overseas presence. So that's the other segment. And the third segment where we are, very, very constructive at this point in time is the hospital space, which we discussed in detail earlier.
Okay, so banks, NBFCs, auto ancillaries, and hospitals in that pecking order. That's the preference at Kotak Mutual Fund. With that, Shivani, it was lovely chatting with you. Look forward to more conversations as well, and wish you a good rest of the day as well.
Thank you so much. A great conversation, and wish you a good rest of the day as well. Thank you so much.
Thanks a lot. Thank you. Well, on that note, let's take a look at the market. We are just around the 25,550 mark, 60-point uptick on the index. But let's focus in on the metal space. Metals have been a pillar of strength for the market. Even last year when the markets weren't doing all that well, it was the metal pack that was holding out. And last few days as well, we've seen very, very good traction come through in the metal index. Metal stocks, Tata Steel, Hindalco, all of these stocks have been doing fairly well. But to understand how to approach this space now, I am joined by Aditya Velekar, who's a senior research analyst, metals at Axis Securities. Aditya, lovely chatting with you this morning. My first and foremost question to you is that, metal stocks have rallied sharply. And, one could say that valuations are no longer looking cheap. My question is, are fundamentals still improving, or is the market already pricing in the best case scenario? How are you looking at, what's really transpiring in the metal space?
Yeah, good morning, first of all. So you are right. Means broadly, just to give an overall picture, means what happened in the market is that metals being real assets and a kind of in the volatile AI-driven uncertainty. So this space is particularly not affected by any of the impact of artificial intelligence and all that volatility which we are seeing. Also, the geopolitical tensions across the world, that is also helping metal to some extent. The US dollar has weakened. We have seen that, and Fed rate trajectory has started. Rate cut trajectory has started. So all those factors supported metals. And individually also, if we see metals, especially non-ferrous metals like aluminum and copper, the supply-demand fundamentals are tight. So based on all these factors, we have seen the strength in metal prices, and correspondingly, the stocks have also rallied. You are very correct that the valuations are now looking stretched. So to be precise, the valuations are almost trading at one standard deviation above their long-term averages. So in this situation, I guess the approach should be to the people who are already long, they should continue to remain long. Taking fresh positions will be
Okay.
slightly tricky. Yeah.
Okay. Okay. Taking fresh positions will be slightly tricky, but you continue to be long. As you mentioned that, of course, metals as a pocket not really impacted by the AI-led volatility, but they do stand to benefit from the data center boom, right, in terms of copper, aluminum, etc. So, is it prudent to focus more on the non-ferrous side? You, of course, alluded to both, but is it prudent to look more on the non-ferrous side, especially based on the fact that there is a data center boom that is waiting to unfold?
Yeah, to a certain extent, you're right. What's happening is in the non-ferrous side is that, especially for aluminum and copper, and also to certain extent zinc, that the supply-demand fundamentals are quite strong. So supply constraints are emerging in aluminum because the aluminum smelters are very power intensive. And just a few months back, we have seen that many smelters have shut down. And the sole reason for their shutdown was the power sourcing issues. So a kind of situation is emerging where the sourcing of power is become very difficult. Let me give an example of Mozal aluminum smelter, which is an important smelter of 0.5 million tons of capacity, and they had to shut down because the power purchase agreements were not signed. Also, recently, Century aluminum smelter was shut down in USA. So, correspondingly, the data center was given a priority to supply power, and this smelter was unable to find a power source for it. So, the use cases with respect to data centers, with respect to electric vehicles, renewables, they are all non-ferrous intensive. Those increases the use of these metals. So, on the one side, the demand is strong. On the other side, the supply is constrained. So, for aluminum, in China, the 45 million ton capacity cap is already approaching, and in rest of the world, the new smelters are not coming. So that is the situation for aluminum. Uh, let's now get back to the our stock. So we have Hindalco, Nalco, Vedanta, all those stocks like Hindustan Copper and Hindustan Zinc also. So to a large extent, all these positives are factored into the prices. So the valuations have, we can't say that the valuations are cheap. So one has to
Yeah.
take a tactical buy on dips approach in this situation.
Sure, tactical buy on dips approach. I think the tactical approach was also flagged by Shibani from Kotak Mutual Fund, who had joined in just a short while ago. But let's talk about the steel segment now, the ferrous side of it. How much of the China involution drive, that news flow that came through last year, how much of that is factored in? Because obviously, if there are supply constraints from China's end, that would be a positive for the Indian steel names, right? So, how much of that is priced in when it comes to the ferrous side of the universe?
So coming to the ferrous side, the dynamics are certainly much more different than non-ferrous side. So if you look at steel, China is the largest producer of steel with almost production of 1 billion tons in the last calendar year. And India stands a distinct second with on near about 200 million tons of production. So China's production and its exports decides the marginal steel prices for the globe. But what happened is that you're right that they have started anti-involution policies and they have started cutting down their production because of this all these trade tariffs and trade barriers. Their exports in the calendar year 25 has stood almost 10 to 15% higher at 110 million tons of steel. So, if you look at the production of China for calendar year 25, that has declined by 4.4% to 960 million tons. First time below 1 billion tons. So, their anti-involution policies and their intent to reduce the steel capacity and steel production is seen on the ground in numbers. And that is a good sign because we want China to scale down its production because they are already exporting huge quantum of steel in a situation where each country is going for a protectionist policy. So that depresses the international benchmark for steel prices. So that's positive read through for Indian steel mills. But then again, for Indian steel mills, there are a couple of constraints. Number one is that we are seeing the production capacity increasing across almost all the players are announcing new capacities. So despite our steel consumption growth staying strong at 8 to 9%, which is the best as compared to the rest of the world, our production is also increasing. So that is number one. Number two is that with the carbon border mechanism taxes, CBAM implemented from 1st of Jan in Europe, the export opportunities in Europe could shrink going forward. And then China is also there to compete on the exports front. So this couple of challenges are there. So steel prices, we have seen steel mills taking price hikes in the month of January and in the December and January because of the Q4 being a construction season and a strong quarter. But maybe we can see a few more hikes, but outright rally in steel prices will be limited by the two factors.
Okay, got your point. Last question really, Aditya, in terms of, you mentioned Q4 in the report also that Q4 is a seasonally strong quarter for metals. Which end of the spectrum is poised to do better, ferrous or non-ferrous? And what are your top picks at Axis Securities when it comes to Metal Universe?
So ferrous is definitely poised as a better quarter, Q4 as a better quarter for ferrous because we have seen that the valuations for non-ferrous companies have rallied substantially. So they have delivered a huge returns. Ferrous was slightly late to capture that cycle because the steel prices were subdued until the end of the December as the safeguard duty was not ratified and because of the extended monsoon. So steel prices have seen were at the lows in the month of December and they started rising post that. So that impact of higher steel prices will be felt in Q4. That will increase the spreads and that will directly drive into their EBITDA. Also, Q4 is a seasonally strong quarter for steel, especially for steel names. So Q4 is well positioned for ferrous names. We have seen some rally in the steel stocks and valuation catch up. Some upside is still remaining, and as the numbers comes through, we could see some upside in the rest of the steel stocks.
All right, that's about steel stocks. Your top picks at Axis?
Yeah, so our top picks, Tata Steel is our top pick in the ferrous side, Hindalco on the non-ferrous side, and then we also have APL Apollo Tubes. It's not an integrated steel manufacturer, but it's a proxy of India's construction demand, and it manufactures steel pipes and tubes. And we have seen the company doing quite well despite last calendar year being slightly muted. And with a lot of headwinds, the company has managed to deliver a good set of numbers, and it has also increased its sales volume guidance by almost for a guidance of 20% year-on-year growth in sales volume. So the company has outperformed its peers, and with the safeguard duty coming in, the volatility in steel prices is expected to come down. So that will be beneficial for APL Apollo. So three stocks: Tata Steel, Hindalco, and APL Apollo Tubes are our top picks.
All right, flashing on your screens, those are the three recommendations, picks rather, top conviction ideas rather, not recommendations as such, from Axis Direct. With that, Aditya, would like to thank you for taking out time and joining in. It was a good conversation.
Thank you very much.
And I look forward to many more such conversations in the future as well. Thank you.
Thank you.
Well, on that note, let's shift focus to a Moneycontrol exclusive. Now, sources say that the sale process for the Royal Challengers Bengaluru franchisee is entering its final leg. Now, my colleague and the deals editor of Moneycontrol, Ashwin Mohan, who broke the story earlier, is joining us this morning. Ashwin, what are you picking up? You've been breaking exclusive stories on RCB for quite some time, and that happens to be one of my favorite teams, by the way, IPL teams. Take us through what the exclusive news is here.
Right, Namita, good morning. So, if you take a look at the charts, you will see that the stock price of USL, United Spirits Limited, has perked up by nearly 7% in the last 1 month. And the reason for that is, of course, that parent Diageo is slowly approaching the slog overs of this big bang mega sale process of IPL franchise Royal Challengers Bengaluru. Now, we at Moneycontrol have been reporting the various developments of this deal. And now what we are picking up from our sources is that it's time for the final stage to enter very soon. And what we are given to understand from our sources is that all the shortlisted suitors post the initial submission of bids, all of them have been told by Diageo to submit their final final binding bids by mid-March. So that's the deadline we're looking at as far as the submission of binding bids is concerned. Of course, Nandita, binding bids will be submitted post the completion of the due diligence process that's going on as we speak. The due diligence process is set to conclude by March 10th. So March 10th is when the DD completes, and mid-March, a few days later, is when they are expecting the submission of the final binding bids. Remember, it's going to be a very, very hotly contested deal because there's an unusually high number of players that have been shortlisted as far as the second stage is concerned. Around 9 to 10 players, a mixture of strategics as well as private equity players. Diageo, of course, is going to try its level best to maximize value and try and come as close as possible to $2 billion. However, we are given to understand from our sources that the buy side, the suitors are looking at anywhere between $1.5 to $1.7 billion. So we are, in fact, approaching the final stage, Nandita. And remember, this entire process has been initiated as part of a strategic review by Diageo, because at the end of the day, it's a global liquor giant and the IPL franchise is non-core to it.
Sure. Of course, mid-March is when we could expect clarity on this. But Ashwin, now that the timelines are clear, what do we really know about the potential consortiums for this mega deal, which of course will set a benchmark for the IPL M&A?
You hit the nail on the head, Nandita, with that question. As far as Royal Challengers Bengaluru is concerned, this is the trophy asset. There are several other deals going on in other IPL franchises like Kolkata Knight Riders, like Rajasthan Royals, but this is the big one that is going to set the stage as far as the valuation of other teams is concerned. Now, when we talk about consortiums, well, what we're given to understand from our sources is that Ranjan Pai's Manipal Group, that's one of the shortlisted parties, they had held advanced talks with private equity firm KKR. That's, of course, the US private equity giant. And if required, Temasek could also join that consortium. Remember, Temasek already has a connection with Manipal because they picked up a majority stake earlier in Manipal Hospitals. Then we have the other billionaire in the fray, that's Adar Poonawalla, Serum Institute of India. He's learned to be in talks with several private equity players, including TPG. So those are two consortiums that we're looking at. But, one will be very keen to see how aggressive the bid will be from the Glazer family. And that's the family that backs football club, EPL football club, Manchester United. They are believed to have put in a very aggressive bid earlier of $1.8 billion. We also have a few other private equity players, Nandita, that have been shortlisted, EQT and Premji Invest. So one will have to wait and watch till mid-March to see which of these players finally tie up formally, because that's when one is required to name the consortium partner, Nandita. Back to you.
All right, thanks a lot. Hotly contested really, and we'll be watching out for details. I'm sure Ashwin will be the first one to get us exclusive details on that as well, and we're waiting for that. Thanks a lot for joining in this morning. All right then, that was Ashwin with the exclusive details on RCB and how the bidding process is on. But let's take a look at the Nifty. We are down, in fact we are up just 30 points. It's a steady day of gains as of now, but let's see how things really pan out. As I mentioned, it's Sensex monthly expiry as well, so you can expect a fair bit of volatility. That's already playing out because last time I checked, we were up 60 points and now we've halved those gains. So yes, some bit of volatility is there, but the broader end of the markets are only picking up traction. Right now, the mid-cap index is up over 0.5%. Breadth of the market is looking pretty solid. 5:2, that's the NSE advanced decline ratio. So going good, but let's hope it stays this way. Looking at the Nifty then, a few gainers. Tech Mahindra, Max Healthcare, Infosys, Dr. Reddy's, that was among the top laggards yesterday, has staged a good comeback. And some of these other pharma names like Cipla, Sun Pharma are also doing well. So all in all, turning out to be okay right now, but we'll have to see because the Nifty is fast, giving up those early gains. So let's see whether we manage to hold on to these gains or not. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. But stay tuned to Moneycontrol for all your other news and updates, and we'll be back with the markets at 3 p.m. On Closing Bell. Don't forget to join in for that as well. Thank you and have a great day.